Welcome to the Capital Spreads Weekly Update. Today is Wednesday the 23rd of November 2011 and the weakness in equity markets does seem to be continuing into this week. We saw very poor performances last week, continued uncertainty, and really now it's been all about the US debt situation. Their super committee not able to agree on how to tackle their deficit. It's the same situation we saw back at the beginning of August, which then of course led to a downgrade by S&P of their AAA credit rating. Even though the rating agencies have said that they're not going to downgrade the US any further, there is still that threat. If the Republicans and Democrats cannot agree on the reduction of their deficit, then there's going to be continued uncertainty within the equity markets, which of course are continuing to struggle from the European sovereign debt crisis, which is ever ongoing. So at the moment the FTSE is just below 5,200, the Dow at 11,400, and the risk aversion is affecting currencies as well. So Euro's pretty weak, Euro dollar at 134.00. Similar weakness for cables at 155.80. And also what we would expect usually to be a safe haven investment, gold, has suffered from this risk aversion as well. It just goes to show that actually gold really is a risk asset after all. So we've seen it dip below 1700 and looking pretty bearish. It's at 1690 at the moment, and similar for Brent, a bit of weakness at 107.70. So this week obviously has all been about focus again on sovereign debt yields for their 10-year government bonds. They have been oscillating for the likes of Spain and Italy, just a bit of pressure to the upside, and every single equity rally is very short-lived at the moment. So the technical outlook short term looks very bearish for the FTSE. We'll focus more on the FTSE in the theme of the week, but certainly ever since we broke below that key support level of 5,400, there's been very little pressure to the upside. So how are clients trading at the moment? Well, they've been buying tentatively on the weakness. Clients were longer the FTSE a few days ago, but the continued weakness has stopped a few of them out. They are also buying the Dow, so relatively bullish, opposing this weakness, expecting a bounce possibly in the run-up to the new year, which is what historically happens. On the currencies, they're long sterling on the whole, so they're quite long cable, and they are very much long gold, been buying into this weakness in gold at the moment. On the crude front, bit of a contradiction there. They seem to be short Brent and long NYMEX. For the rest of the week, things are quiet going ahead. Really the only things to highlight are GDP numbers tomorrow, which come in the form of German and our very own UK GDP. It'll be interesting to see if there are any revisions downwards, which is what we saw yesterday from the US. A bit of a big revision downwards to the US GDP, which of course has added to the sellers' momentum. So the theme this week, well, as we approach Thanksgiving in the US, that's tomorrow, so US markets half day tomorrow and then close Friday, we usually tend to see historically a bit of bullishness around this time of year, and that can continue into December as we get a year-end Christmas rally. But of course this year, are we going to see? There's a big question mark, and I've got a chart here of the FTSE. As you can see, that ever since we broke below 5,400, there's been a bit of a continued thrust to the downside, and so the question really at the moment is, are we going to test the year lows around 4,900, 4,800? But also from a longer term point of view, and more worryingly so, is are we in the process of forming a head and shoulders pattern, a very large head and shoulders pattern in the FTSE? We're yet to see whether that's materialized. If we do break below 4,800, that could be considered as the neckline of this Head and Shoulders, and it could be a precursor to even further weakness. So there's nothing to rule out, maybe a bounce towards the end of the year before a big push down lower in the new year, but as ever we'll have to wait and see. So that's it for this week. Do give us feedback, media@capitalspreads.com.